Good morning, ASEAN. Freshen up your world, your thought, your idea with us every Monday to Friday from 7:30 to 8 a.m. And today is Thursday, 21st of March 2013. You're with me, Nirasha Malisak-Lamia.
I'm also here with you, Weena Jongprasit.
That's right. For this morning, Kun Weena, so far, I believe that a lot of investors have keeping an eye on what's going on right now, which is the baht appreciated against the US dollars.
Yeah, that's right. And it's now about 29.1 baht per US dollars. And also, especially Thai exporters are keeping an eye on this strengthening of the baht. We have another story on currency today, Kun Nirasha.
Yes.
Our neighboring country, Myanmar. Normally, you think of the currency in Myanmar, you think of the Jat.
Yes, that's right.
But now there is another currency that's been used by government ministries. Now, latest is about to be abolished. Myanmar announced the abolition of its US dollar proxy currency in its latest step towards economic normalization as Myanmar opens to the world. More than $30 million worth of foreign exchange certificates, or the FEC, will be phased out of existence, Finance Minister Win Shane said in Parliament without giving a time frame for the move. The currency introduced by the former junta 2 decades ago as an alternative to the U.S. greenback, which it officially banned, is no longer required, he said. Economists welcomed the move, which was expected as part of the country's economic liberalization. Many government ministries conduct their financial affairs in FEC, while certain transactions involving customs, including the purchase of foreign imported cars, require the currency. The Jat is the primary currency of Myanmar and is used everywhere, although many hotels and other tourist-focused enterprises also accept US dollars as an alternative. Sean Turnell, a Myanmar economic expert at Australia's Macquarie University, said that the announcement could be a new test of public confidence in the government's handling of the economy. He said that in the past, movements like this have caused panics, but perhaps there is greater trust in monetary arrangements now, adding that those holding FECs would rush to convert them to US dollars.
And that's right, Convener. And in Myanmar Focus today, we have the Myanmar Parliament rejected the proposal to limit foreign ownership to 49% in some sector.
Yes.
So how could this affect, how would this impact the foreign investors? Let's find out more in this report.
November last year, Myanmar Parliament made a significant approval of the new foreign investment law, giving more benefits for foreign investors interested in investing in the country. But earlier this week, the Parliament has rejected the proposal to limit foreign ownership to 49% of businesses in some certain sectors.
What was the background of the stories and what are the sectors that this change will be applied to, and how will this affect foreign investors? I will be speaking with Ms. Wee Kim Chia, Director and Foreign Consulting Attorney from Kelvin Shea Yangon on this update.
Yes, they have indeed confirmed the joint venture ratio of 80% to 20% instead. The foreign investment law rules and the MIC notification had already provided for a joint venture ratio of 80 to 20. Parliament at some point of time was looking at it to see whether it should be instead 49 to 51. But further to the recent decision by Parliament, basically they have confirmed what is in the rules that's issued by the Ministry of National Planning and Economic Development and the notification issued by the MIC. So we have a clarity of position as at 80 to 20.
What are some sectors that this rule will be applied to?
There is an entire list of activities which require a joint venture. There's a compulsory joint venture list in the MIC notification. There are about 42 items on the list, some of which would include matters such as production and distribution of confectionery, production and distribution of chemical products, large-scale mining, establishment of factories for fabrication of concrete products, iron beams, the real estate sector, such as establishment of sale and rental of apartments and condominiums, establishment sale of office and commercial buildings, international and domestic air transport services, so and tourism. So this is just a sampling. There are altogether 42 items on that list.
And how will this affect the foreign investors? Will it affect the confidence of foreign investors?
Will it affect the foreign investor? If they are investing in this sector, then it will be necessary for them to have a joint venture partner participating in the project to the extent of 20%.
However, the question remains whether allowing foreign ownership for 80% will actually benefit Myanmar in the long run. On the way, Mi Sang from Myanmar in Focus Daily.
Now let's have a look at another Myanmar update, which is a riot started in Metila of Mandalay regions over gold trading. A quarrel broke between the owner of New Wenchsen gold shop and the two sellers, resulting in the sellers being beaten up by 4 people in a large crowd that gathered to witness the mishap. Local police tried to handle the situation after the crowd destroyed New Wenchsen gold shop and Townwind gold shop located at the eastern side of the Metila market. The Metila market was closed down at 3 p.m. local time, and other shops in the city had also closed down, and over 200 people were still gathered at 5:30 p.m. A reporter from 11 Media said that a quarrel broke out after the gold that was supposed to be sold broke off at the gold shop after being robbed on the touchstone to check the gold quality. The reporter also said that the sellers did not accept the 80,000 kyats offered by the gold shop owner. Instead, they asked for compensation. A quarrel broke out and 4 staff from the shop beat up the gold sellers.
Moving on to trade with Vietnam, the Vietnam Trade Office in Sao Paulo has forecasted that trade between Vietnam and Brazil could hit $2 billion this year. The office said that the bilateral trade has seen rapid growth in recent years despite the impact of the global economic recession. During the year 2000 to 2012, the two-way trade saw a 65.2-fold rise from $26.2 million. Last year, it reached $1.7 billion, an increase of 13.1% over 2011. Export turnover was reported at $718 million, up 20%, while import turnover was up 8.6%. Export turnover in the first 2 months of this year is estimated at $152 million, a rise of 68% in comparison with the same period last year. Meanwhile, imports from Brazil in the first 2 months this year decreased by 46.7% to $92 million. By 2015, Vietnam-Brazil trade is expected to reach $2.5 billion, and by 2020, it expects to reach $5 to $6 billion.